Welcome to the What Mortgage Show. I'm Stephen Little. The population is ageing and an increasing number of people nearing retirement or already retired are looking to borrow in order to purchase a property or fund their lifestyles. However, for many people looking for a mortgage that lends into retirement, securing finance can often be tricky. We have Paul Broadhead from the Building Societies Association who is going to talk about what lenders are doing to help older borrowers. Paul, thank you very much for joining us on the show.
Hi, Stephen.
Building societies have currently seen an upswing in the number of older borrowers looking to take out a mortgage, and the amount of mortgage debt held by the over 65s is almost set to double to 40 billion by 2030. Just why are so many people looking to take out a mortgage later on in life?
I think there's a range of factors, actually. I think, first of all, if you think the days of buying a home in your 20s, trading up in your 30s and 40s and having that debt paid off by the time you retire are, for many people, long gone now. So actually there's two factors. First of all, people are buying later, not only facing the prospect of buying later, but also now borrowing for longer with the price of houses as well. So a 35-year term isn't unusual. We've also got those now that are approaching retirement that potentially will have paid their mortgage off in the past, but now want to raise some money from their home, either to help them to downsize, because downsize doesn't necessarily mean a cheaper property, or to help their children and grandchildren onto the housing ladder, or fund their lifestyle into retirement, or even to supplement pension income. So I think the demographic is changing rapidly, and I think almost over the next 20, 30 years we're going to see what we've always thought of as the traditional mortgage market turned completely on its head.
So why is it important that lenders start addressing the challenges faced by older borrowers?
Well, I think we know we've got an ageing population, so a 65-year-old today can expect to live to 90, and for many people they'll still want full access to that range of financial services that they've always had. The days of people retiring on a defined benefit pension are coming to an end and will continue to come to an end as well. So I just think that because we're living longer, we've now got a larger population, that actually the need to borrow is becoming much more of a need for many more people later in life for those range of reasons.
So if people are looking to borrow into retirement, what is it that they need to consider?
Well, there's a range of factors. First of all, we've done some work within the building society sector to increase age limits. So we've now got 34 societies that will lend to people over the age of 80 or even with no age limit at all. But the main thing is, first of all, to understand what you're getting yourself into, to make sure that you're comfortable, that you can afford those repayments in retirement, and take steps to mitigate. I mean, clearly, the older you are, and particularly if there's a couple of you, the more likely one of you is to die. And what you don't want to do is to leave that remaining spouse with financial difficulty as well. So there's a range of factors that need to be considered. So it's vitally important that people do take advice.
Right, but is increasing up the age limits on mortgages enough? Does more need to be done to help older borrowers?
I think more does need to be done. So what we've had really in recent years is you've had a traditional mortgage that works pretty well up to about the age of, or taking the mortgage out up to the age of about 55 or 60 maybe. You've then had an equity release market that typically isn't taken out till somebody's in their early 70s. And actually there's a big gap in between where we really need some innovation in the marketplace. So we've been working with the regulator to understand what needs to change, how products need to develop, listening to consumers and groups like Age UK to understand what calls they're getting into to make sure that we've got products that are fit for purpose. But we can't do this alone. We do need the regulator to come along with us to make sure that consumer protection does remain at the heart of the market.
So since the BSA launched its review of the later life lending market, how have things improved?
So things have improved greatly, I think. I mean, first of all, you've now got 34 lenders that will lend to people that are much older, still with keeping that consumer protection at the heart of it. So there's much more choice, there's much more competition for people in the market. We've also started now to see some innovation at the edges. So for some people, the equity release product is the right one for their circumstances. For somebody who can pay the interest on that mortgage, that may not be the right product for them. So now there are more choices available. Now, I don't think the job is done. We're still very much at the start of this journey, and we need to make sure we work with consumers to make sure that we can meet their demand going forward. But I think if I looked at the report card, I'd say we've made a pretty good start, but there's still much more work to be done.
The Bank of England recently warned lenders about the risks posed by 35-year mortgages. There are also concerns about dementia and pension freedoms. What are the dangers of lending to older borrowers?
Well, the one thing I would say is that it's not necessarily riskier to lend to older people, but the risks are very different. I mean, some might say that if you've actually got a defined benefit pension, you're probably a better bet than somebody who's 25, because you're not going to lose that income tomorrow, whereas a 25-year-old could lose their job. So for those people, that's fine. You're absolutely right, though. Pension freedoms was a bit of a fly in the ointment, if you like, because what a lender needs to be sure of is that you can afford that mortgage today and also in the future. And it's really, really difficult now to underwrite against somebody's pension when you don't really know what they're going to do with that. So we're working with the regulator. The Financial Conduct Authority is set to publish, hopefully in the autumn this year, a strategy, a regulatory strategy on how it believes they need to deal with the ageing population. And that will give lenders some confidence about what's good practice in that area, what's poor practice in that area. Coming back to the dementia point, I mean, dementia can happen to you know, somebody younger as well, not necessarily older, but as you say, the risk does increase. So again, there are things that people can take to mitigate that, something like a lasting power of attorney. That means if somebody doesn't have the capability to manage their affairs, there's a trusted family member that can step in and do that for them. So that gives them confidence. And there's even some lenders now that will lend to you in retirement and you'll actually get a discount if you've got yourself a lasting power of attorney, because it gives the lender confidence, it also gives you confidence that your affairs are going to be looked after.
And mortgage debt for the over 65s, it's set to go up by, I think, about 19 billion
Yes.
in the next 13 years. I mean, to me, I see this figure and I think, you know, what's going to happen here? You've got, you know, people who are pensioners, you know, how are they going to pay off this debt? They could technically lose their homes, couldn't they? I mean, is this a worry?
They could technically lose their homes, but of course, you know, repossessing somebody's property is an absolute last resort. So again, it's about getting the right product for them, because if they're concerned about that affordability, they may well be better off with an equity release product, because of course what that then does is you've no repayments to make. That's going to be repaid either when you sell the property or in the event that you die, and that will be repaid from the estate. So that's in there. But let's also remember, as you say, this a £19 billion increase in mortgage debt in the over 65s also by 2030. We estimate that the over 65s will own £3.3 trillion of property wealth. That's 58% of the property wealth in the country will be in there. So actually, if you look at, you know, a debt, if you like, of £40 billion worth an asset of 3.3 trillion, it doesn't look that great. It sounds a very big number and is a very big number, but in the scheme of things, there's lots and lots of security for those people in order to back up that lending.
I mean, does it all come back to the question of housing supply at the end of the day?
It really does. I mean, there's some challenging now. We often hear the government talk about people should downsize. You know, the children have flown the nest and they're rattling around in a 4 or 5 bedroom property. They should downsize. Now, I don't think it's for lenders or anybody else, frankly, to tell people what they should do with their property. But one of the challenges that I pick up on from speaking to consumers and others is the challenge often for those people is they do want to downsize, but they just cannot find the right type of property for them in the right area. People no longer want to retire, certainly don't want to live in flats often, because they need that space to put all of their accumulated stuff from their life that's really, really important to them. Often the bungalow by the seaside is just a bit of a cliche. People want to be near friends, family and facilities as well. And we just haven't got sufficient housing stock of the right type that these people would choose to move into. So that's something that also needs addressing. But you're absolutely right. We've been underbuilding in this country for decades now. We've seen successive governments fail to get a grip. We've seen a revolving door of housing ministers come and go, all of which have said good things, but very few of which have delivered anything to help people. So now I think is a time for us to make a concerted effort. All political parties agree that we need to build more homes in the places where people want to live in order that they can afford them. So, you know, we now need action rather than warm words.
Yeah, so do we need to see more action from the government?
We absolutely do. We've seen some steps from the government. We've seen a housing white paper. That's great. It's got some really good ideas into it, but at the moment it's still words on a page, and that needs to be turned into action.
All right, well, thank you very much for joining us, Paul. And thank you for watching.